Okay. All right. So just a quick recap. When we did financials, we introduced the various terms that will come across when you do your financials. And we emphasized that we have three main statements. There are more statements existing, but these are the core, or they stay at the bottom of the pyramid. And that is the income statement, which is profit and loss. It basically indicates the performance of the business for an accounting period. So a period could be a month, a year. A balance sheet reports the financial position at a particular time, at a particular point in time, while the cash flow statement shows the inflows and outflows during the accounting period. And usually it has the component of operating cash, investing cash, and financing cash flow. Operating cash, these are items mostly related with the income statement, largely, and the current assets of the balance sheet, that is accounts receivables and payables. When we go to investing, inflow is, did you buy anything or any asset, or did you sell any of the existing assets in your business? Then on the financing cash flow is, did you borrow or did you pay back some money? So you will find all these factored in. I'm just going to go a bit faster. And this was the key standard outlook of how an income statement would look like. And we talk about EBITDA, earnings before interest, taxes, depreciation, amortization. And when you remove the depreciation and amortization, you get the EBIT, earnings before interest and taxes. When you remove financial expenses, you find you have earnings before taxes. And when you remove that, you get the net profit. Okay. Some people call EBITDA the operating profit. Okay. Because it is cash incurred during the operations. All right. And all this we went through last time, so I'm just not going to dwell so much in this. All right. So I'm going to pick the financial statement that we have a copy of, and emphasize a few things. So this, as you can see, this financial statement, my screen, it allows you to fill your basic performance details. And my assumption is, if you have been in operation and you've been capturing your documents, this is one template that you can easily make use of. Okay, so I'll say I'm going to try and change here, and you can rename there and say financial statements. Financial statements, because now it sees as being a template, but it's now financial statements. Then I can put here the name of the organization, ready, okay, or renewable energy business incubator, better. And I can put the contact name. I can say Roy Masiga. Okay, email address, and say this is my email address. Okay, and this is year 2021, country Uganda, currency is Uganda shillings. Okay, so usually we normally consider a financial year. So here we are going to say your financial year ends in December. Some of us, our financial year ends in June. Okay, if you are following URA, either way, it will always be a financial year. Okay, so no worries about that. So you can say Okay, for this case, I'll say it's 31st of December. Okay. Okay, you don't need to put the year because the years are already below. Okay. So if you have records of 2018, you just put here, what are your total revenues? So I'm just going to assume some numbers for purposes of us understanding. I'll say in here, I registered and started operations in 2018. In 2018, at the end of the year, maybe I made 40 million. Okay, that was my year one. And year two, that is 2019, maybe the business grew a bit and the performance increased, so I made 60 million the entire year. Then in 2020, there was some COVID effect and probably performance went down a bit by 15. So I'll say maybe I made 45 million. Sorry, 45. Okay, and in 2021, I'm going to assume that the year has ended. Or alternatively, I can leave it as that, and I'll project for 2021. Okay, so you'll notice the gross profit here is indicating is 40. Okay, but usually from revenue, we remove usually our cost of goods sold, or in our previous sessions, we had the total variable costs that contribute towards the product. Okay, so I'm going to assume our total variable costs is going to be 25 million for year one. Year two, I'm going to assume it is 34. Sorry, 34. Year three, I would say it came to 37. Oh, sorry, it's long, so I'll say maybe I used 29 million, sorry. Okay. Yeah, so as you can see, that was those are my profit margins. Then I will put operational costs, as you can see below. This is a classification of the operational costs. So I can say, okay, for transport, for storage, transport, and marketing, I will say maybe I spent a total of 3 million in year one. Sorry, 3 million. Then I spent 5 million in year two. Usually the assumption is if you're making more money, you're also investing a little bit more in your marketing and the other bits. It cannot be you're making more and you actually, the marketing and sales seems to be less. Usually it corresponds in a way. And maybe in 2020, maybe I had to do a lot of logistics because of the changes to deliver to customers. Maybe my cost went to 7 million. All right. Staff costs, these are like salaries. Okay. You can call them salaries and wages, or you can call them staff costs. I'll assume on year one, I'll say maybe we paid 10 million. Year one, year two, maybe we paid 12 million. And year three, maybe we paid, because of COVID, maybe we had to cut off some staff. So maybe we had to spend 8 million. Okay. Traveling costs, I'll say, okay, there's a bit of movement. So I'll say maybe in year one, I spent 1 million. In year two, I spent about 2.5 million. And year three, I spent about, because there was lockdown, maybe I spent 500,000. Office costs, say the rent is probably the same whether I'm working or not. So I'll say maybe year 1, I did 1.2. Year 2, 1.2. Year 3, 1.2. All right. Maintenance costs, probably I maintain monthly. The equipment at a cost of 500,000. For the 500,000. For the 500,000. Okay. Other costs, I'll probably say, okay, maybe licenses and all these other minor costs. I'll say 400. Legal costs and these other, maybe 600 here. I'll put here maybe 400. Okay. Ladies and gentlemen, if you have accurate figures, you should be able to see that on year 1, I made a loss of 1.1 million. In year 2, I made a profit of 4.2 million. And on year 3, I made a loss of 1.6 million. Okay. And this is before I put depreciation. Okay. I don't know if here we have some working schedules. Okay. I'll assume you have calculated your depreciation, but I'm going to show you in a different worksheet how to come up with some of these things. So in depreciation, I'll say maybe I incurred about 350,000. Now, depreciation is not a cost, but it represents the amount of money you need to keep so that by the time the equipment you have loses value to 0, you can be able to buy a new one. So in accounting, we make sort of like provisions. So it's not a physical cost that we incur, but it's usually a cost that we factor in. Okay. And that is why when we go to the cash flow, we usually return the depreciation back, because it means the money is still there. It's not that it's used, but we consider it as a cost. It's almost like we are saving for to buy for the equipment and machine later. I hope this makes it a bit clearer. 400 and maybe yeah, 400. Okay, so that you can see earnings before interest and taxes comes to 1.45, and then if maybe I'll say I've not borrowed any money, I'll put it at 0. Maybe in 2020 I had to get some money because COVID must have messed me up, so I'll put maybe I got a 10 million loan boost. I got an yoga there, and to boost also 10 million loan. That means I'm paying an interest of maybe 20%. So that means I need to pay an interest of 2 million. Okay, yeah, 2 million. All right. Usually when you make a loss, you don't pay tax, but when you make a profit, you pay tax. So I'm assuming tax is 30%. I'm working on this sheet so that you can, when I use another sheet, you will understand what a financial model is and what a typical template is. Okay, so I'm taking us through this so that you can understand the difference between a typical template and a financial model. Okay, so 38 times 0.3. Corporate tax is 30%, so that means I'll pay here 1.4. 140. This year I won't pay because it's a loss. Yeah, and I decide if I'm paying dividends or not. Yeah, and that simply closes in my income statement. As you can see, looking good, all the costs are typically covered. So if you have these costs, if you've been capturing your documents, chances are you already have a financial an income statement, all right? For balance sheet, the same. If you've been capturing your documents, you simply put here the costs, okay? And this tool and this template, we shall be able to fill in all these costs. I hope you can see on the cash flow here below, it was capturing anything that I put on the income statement, it was capturing in the operation. So you'll find it picks the EBIT, earnings before interest, then it will pick the change in inventories. Now, this template does not offer some things like knowing the changes in inventories, change in accounts receivable, changes in account payable, depreciation and amortization. But if you normally work with auditors or accountants, usually they give you a complete statement. So the assumption is you have some of these things, okay? Yeah, if you do that, you should be able to have your financial statements. Okay, now this is a quick run through on the template that you already have. The template works best if you already if you've already captured your details and documents, or you pre-recorded and an accountant came and summarized your documents. So ideally, you should be able to have all this in one phase. Okay. Now I'm going to make use of a different. I'm going to make use of what you will call a financial model. Okay, and financial models are created to help entrepreneurs in a way understand their numbers, but also simplify so that they don't keep on doing the same things. But it's also a bit of work behind for you to be able to get the details. So I'm going to make use of a financial, I'm going to build a financial model live, and then I'll share a template. You'll decide to use which structure works best, because I'm going to try and work on 2 ways. And based on the 2 ways, you should be able to see which model is best. But in principle, if you have, or if you've been capturing your documents, you should be able to use this template already to actually put your 3 statements, the income statement, balance sheet, and cash flow, because this one just simply provides for that. Okay, but sorry, and feel free to ask any question about this template, because I'm going now to move into what financial modeling is all about. So if anybody has a question, I beg to answer anything you will need to know, because this template was shared about a week ago. So I'm assuming you've already probably tried to feed in some data here and there. And if you have any challenges, this is the time. Feel free to ask me any question about this template before I go about what financial modeling can be. Okay. Any questions? Any questions? Any questions, please? You can type on the chat. Any questions? You know, accounting sometimes is a bit, some people look at it like mathematics. So sometimes it's not everybody's cake, but I'm going to try and make it your cake with a few simplified approaches. So feel free to ask me any question, any question before I close this template. Okay, and I am going to stop recording because I've finished on this template particularly.